I was working in investment banking, and I was going from market making to trading to corporate finance. And somebody handed me a book in 2006 called Rich Dad Poor Dad. It really related to the rat race. And right after reading that book, I decided to quit my job and return to my passion. Of economics. I decided that the business that I wanted to create, as well as being an investor, but I didn't have any money to invest. In fact, even though I had a well-paid job, I was about £100,000 in debt, and deep in the rat race and consuming rather than investing. So in 2006, I decided to throw in the corporate towel. And I started trying, the business I tried to create was actually a non-fractional reserve bank, because I was really studying the fraud of money, and how it's actually created. And so that led to me to writing the book, Bank to the Future, Protect Your Future Before Governments Go Bust. And that led me to actually speaking at the very first Bitcoin conference in the world. When I spoke there, I realized that the Bitcoin community was actually creating that infrastructure. So I bought my first Bitcoin at $3, and we started investing in all the companies. And so the Bitcoin did well. So I was looking at the cash flow quadrant, reinvesting some of my assets. We started investing in companies like Coinbase and Kraken and Bitstamp and Bitfinex. And many of those, about 10 of those, have gone on to become the exchanges that built our industry. So we built banktothefuture.com to allow other people to co-invest in the stocks and shares of early stage Bitcoin companies, and the rest is history. So you've got a part to play in the story that you may not know about.
We don't, I stay out of stocks, and it's because I don't have control of it. The CEO is a counterparty risk in that thing. I just don't. I worked for Xerox for a while and got a bad taste of corporate, and I should have bought Apple because I love Steve Jobs and all this, but I just want to stay away from them. And I don't know why, but it's kind of a personal discipline. So yeah. I'm in gold, silver, and Bitcoin simply because exactly what you said, the banking system is based upon a fractional reserve system. And the average person out there has no idea what I just said. Wouldn't you say that's true?
Yeah, and even if you learn that it's based upon a fractional reserve system, it turns out that there's no fraction and no reserves.
That's true.
The reality is that it's not even, stocks are a way. You're pushed to stocks just to try and beat inflation. Right. But the bank deposits are just as risky. There's counterparty risk in the bank deposits, and you're betting on the credit risk of the bank, and they're taking excessive risks. And it's only the Federal Reserve and how the whole system's connected that keeps it. And it's not even insured. You think your deposits are insured. Only 1% of those is actually covered.
What is your take on the banks with Bitcoin, or what do you see happening coming down the road?
Yeah, so there's two types of banks at the moment. There's banks which have sold off all of their toxic assets to your pension. And the 401k is holding all of those toxic assets, or the Federal Reserve is holding all those toxic assets. And the second type of bank is one that has excessive risk I believe that the way that everything's moving right now is we've entered this two-tiered economy where you have a new superpower, China, which was built off a quasi-communist stroke capitalist experiment. And then you have America, which seems to be, if you look at the two, you've got America, which is looking more and more like China every day, and China that's looking more and more like America every day. And eventually you converge in this socialist ideal. And so when you look at politics right now, the IMF called out for Bretton Woods 2. I know Kiyosaki, you always talk about, Robert, 1971, the rules of money changed, and that's exactly right. But in 1944 was the precursor to 1971, where this debt-based, backed by gold, but fractions of gold, really started to be. Now, I think we're mentoring into a new monetary phase. So for governments all around the world to pay for all of these obligations that they've made that they seriously cannot meet, we have to move to a completely new monetary renegotiation. And so a Bretton Woods II style moment. And I think that moment is going to be central bank digital currencies, where they're going to be issuing money based upon allowing banks to go bust. So insolvent banks, rather than bailing them out and rather than bailing them in, they're going to let them go bust. And it means that any money that you held at a bank, you can download an app in the future and you'll have this new central bank digital currency. Now, the problem is with that money is it's a deleveraging of the economy, but that money is going to be surveillance. It's going to be removal of all your privacy, removal of all your freedoms. When you take that money, the helicopter money that's going to be issued and used to allow banks to go bust, we're taking out these intermediaries and banks, and technology companies are all going to be built on top of these central bank digital currency. And then you have Bitcoin, which is the exact opposite. So the money that you hold at a bank, you don't own it, but the bank is the legal owner. You can't spend it because of the surveillance and anti-money laundering laws and all sorts that make innocent people not be able to spend their money. And it's being printed out of existence. Then you have Bitcoin on the other side. You can own your money, you can spend your money, and the money supply is completely fixed. So that's why it's a frenzy of companies right now trying to protect their balance sheets from the dollar and putting a percentage of it into Bitcoin, because the writing's on the wall in terms of these trends. And I think we're in one of the largest wealth divides that we've ever seen, with this, incredible wealth inequality that's causing people to really push for socialist ideals, because everybody's deep in debt and the inequality has got crazy. And they're going to push for that central bank digital currency, which is going to be signing away your freedoms, your personal liberties and privacy. Gold is what I call a store of value. And by store of value, it means it's not designed to increase your wealth. It's designed to preserve your wealth. For 5,000 years, it's preserved people's wealth. And so the wealthy and the central banks use gold as a store of value. Whereas Bitcoin is a 10-year experiment, it's a speculative store of value. And that means that it has many of the properties of gold, but it's digital so that it can be used, the utility is greater in certain extremes. But it's speculative because, it's not got 5,000 years of history. So that means that the majority of the world, I've seen my $30 Bitcoin crash to $3 in a day. I've seen my $1,250 Bitcoin crash to $250 in a couple of weeks. I've seen my $20,000 Bitcoin crash to $250 in less than a month. The reason is because people are speculating on whether Bitcoin can become a store of value. And so that means that some people, the vast majority of the world, still think that Bitcoin is a Ponzi scheme, a scam, a currency just for drug dealers, or it's a get-rich-quick scheme. But each year, more and more people realize that the value of Bitcoin is owning your own money, spending your own money, and having a fixed supply.